Hello, everybody, and welcome to the session. My name is Jose Blasco. It is my pleasure to be conducting our SMARTT Tiger Live session today being April 10, 2023. And again, in those sessions, we like to do, let's say, a couple of things. One is to get smart, meaning that we need to understand what's happening in the market so we can plan ahead and have a smart approach to trading. That's what we call our SMARTT approach, a special market analysis report for Tiger traders, isn't it? And apart from that, we will also look at specific market opportunities. We'll look at two specific stocks, actually, I have prepared for you guys. And we will be looking at specific types of trades with options. I will be discussing how those options trades are identified, how they are executed, how the strategy is constructed. And that way, hopefully you can learn from my application, as well as, this could be a great opportunity for you to pick up skill by practicing. Of course, with Tiger Brokers, you can execute the trades in a real account, in a paper money account, with a smaller size, with a larger size. All of those are obviously your decisions, but hopefully with my guidance, you can get to understand steps, processes, methodologies, and things of that sort. So please feel free to interact with me during the session. Know that I am watching you. I am looking at both the chat box on the Tiger Broker app, as well as I am looking at the chat box as well on the YouTube channel. So no matter where you are, I see you, and I would certainly appreciate, and it would certainly be good for you guys to interact with me when I have questions for you, when you have questions for me. So please do not be shy, okay? Do not be shy. Counting on where you are, and I see you. And by the way, I was getting some sound back to me. Also, just to check that all is good, that sound is good, and that you are not shy, go ahead and type a quick hello message on the chat box. That would be appreciated, and it's a great way to get started. While you are typing hello, I will be highlighting our financial disclaimer on the upper left side of the screen. So please read it carefully. It is indeed important information. That's why it's being highlighted. We are talking about trading. There is risk involved. So please read it carefully. I'm pretty positive you are aware of the content of our disclaimer, but just in case, I want to make sure everybody had the opportunity to read it. Okay, so thank you for that. And these are, let's call it introduction for the session. And now it's time to begin. Okay, so we're going to look at key headlines. I'm very pragmatic when it comes to looking at the headlines. I don't like to waste too much time with, talking about news for too long. So I will be very pragmatic and point at what's important. Certainly, this is an important week. I'll explain to you in a moment why. Then we'll look for options opportunities. As I said, I have a couple of trade opportunities with options that are ready to be presented to you so you can learn from it. And then we'll do like a proper complete market commentary that coincides with Monday, beginning of the week. So it's great in the sense that you could plan for the week ahead and understand what is the market condition out there, because when trading stocks, it doesn't matter the stock. In the end, most of them will have some sort of a reaction to whatever the S&P is doing, and understanding the market environment, the S&P, the sectors, all of those things will certainly help you to do a better job in trading, which I guess is why you're here today, isn't it? Good. Still waiting for your hellos on the chat box. Okay, so please do not be shy. Shoot a quick hello. If you want to keep it short, you can also type hi. It's only 2 letters. I'm joking, but at the same time, I'm not. It's serious. I need your engagement and participation, guys. Okay. My name is Jose Blasco. I am a multi-asset trader. I trade all assets. To be honest, I love them all. Options is a little bit of my favorite, given the fact that with options you can construct very different types of strategies and opportunities. With other assets, it's either you go long or short. Which certainly is perfect, but with options you can be more original than that, which I love. I am also the author of a book, Mystery to Mastery series, as you can see on the screen. The book has been designated #1 new release in 3 categories on Amazon. You can buy it in places other than Amazon, and you can buy it in paperback format as well as ebook. And if you'd like to take a look, just follow the link on the screen or the QR code, which is tradewithufos.com/book. Talking about tradewithufos.com, this is the website where you can find everything that we do. You may be surprised if this is your first time with me that I talk about trading with UFOs, and you may be wondering, what are those UFOs? I mean, they do indeed look like flying saucers on the screen, isn't it? Green and red. UFO means on field orders. So buy UFOs or green UFOs is where we have buy on field orders. Red UFOs or sell UFOs is where we have sell on field orders. And therefore, for market timing, for setting entries or setting targets or both, it's certainly something very powerful that we do. You will see me utilizing it today. You are certainly welcome to use other trading methods, because to be honest, there are many ways on how to trade. I'm just going to show you how I trade, obviously. And I can only show what I'm an expert on, which is my own methods. So I will do that today, but you could certainly benefit from today's session by maybe taking the learnings from today and apply it to your own methodologies. Nothing wrong with that, even though if you ask me, the best way to trade, to me, it's the UFOs. I mean, I'm a UFO trader. Now, headlines. Okay, so let's begin with understanding the market now that we have a proper introduction of the session and myself and our company. So now it's time to introduce the markets. What's happening out there in the marketplace? Well, we have Russia, Ukraine, US, China tensions. Maybe I should even add Taiwan to the mix. I'm sure this is nothing new to all of you. Why is this important? Why is this on my slide? Well, this is important because so far it's not generating any impact. But any moment in time, this type of news could generate massive impacts in the marketplace. So these are news that, I mean, we could spend, especially if you're passionate about these type of subjects, we could spend hours talking about it, and it would be such interesting conversations. But from a trading point of view, the danger of these things is that they bias you to either go long or short, or be bullish or bearish. You may want to consider remaining very neutral about the news and only focusing on when the news are out from a timing point of view. Meaning that, okay, if the Russia-Ukraine conflict is happening, that does not necessarily make you or should make you either bullish or bearish. Putting on the side that there are many consequences that, again, we can talk about for hours, and certain things are extremely unfair and everything else. But putting all of that on the side, again, this should not bias us as traders. We should remain objective. And in that sense, the key is, if nothing else is going on, then we know it's there, we don't touch it. But if something in those domains is going to happen, some bomb that fell in the wrong place, some new country, joining or supporting Russia or Ukraine, that kind of thing. So if something like that was to happen, next thing you know, you may want to look at the markets quickly, because the market may react to it. And then you may want to use your trading tools to identify opportunities out of what's happening out there, okay? So let's use the news as a source of opportunities instead of a source of biases that then could put us in trouble, because we are totally convinced of something where the markets, if I could be frank, the markets do not care about what we are convinced about. The markets are going to do what they have to do anyway. So it's not about being convinced about something, it's about reacting in a timely manner to what the reality of what's happening is. Okay, that's the key. US fighting inflation. Okay, it's something that is absolutely not new, but I have it here as well because this week is important. On Wednesday, we have a FOMC meeting minutes, and they may change the interest rates again. So again, we saw a great decrease on speed of increase of interest rates last month. This has a lot to do with the banking industry problematic situation, especially with the case with SVB, with Silicon Valley Bank. And the Fed seemed to be set in ways where they were going to raise interest rates by a lot, many more times. And next thing you know, they kind of chickened out a little bit out of the situation with banks suffering, because now being interest rates higher, so then their clients could not pay the loans, and for now people are withdrawing money, but then the banks got the monies locked in fixed deposit, not fixed deposit, in treasuries or bonds type of products, and next thing you know, they could not have liquidity to return money to clients. And again, this is an oversimplified explanation of what happened to the banks, but I guess fair enough. So all of those things are out there, and it's important to keep an eye on it, because next thing you know, now maybe some bank in Singapore is suffering this consequence, or in other countries. And if that was to become a headline, next thing you know, the market may react severely to this type of issues. And again, severely is not a bad word. It means opportunities for us traders, either to go long or short, depending on on what the market how the market reacts. So these are things for us to keep in mind. And again, avoid biases, but certainly keep an eye on it, even though, when you live your everyday life, you should not be paying attention to this every 5 minutes because, it's not how it works, if you wish. Today, we have a little bit of a boring day when it comes to earnings reports. I mean, the earnings season is about to start. But today is still a little bit boring. We got 168 earnings reports. To be honest, none of the companies that report earnings today are that relevant. Of course, they may be relevant to you if one of the stock reporting earnings today is in your portfolio. For sure, you need to have that under control. But when I mean no relevant, I mean that we don't have the Dow companies in here reporting earnings. Microsoft of the world, companies of that sort are not reporting earnings at this moment in time. Okay, so from that point of view, a little bit of a boring day. So this is what we have when it comes to headlines. Now, I would like to get into real-time charts and real-time opportunities, and this is what we're gonna do now. After we are looking at two specific market opportunities, then we will come back and we will do our SMARTT report, our special market analysis report for Tiger traders. But before that, before I switch to my charts, I also want to give you the opportunity to take a screenshot to this QR code where you can get access for free to one of the tools that I use in my trading. It's called Auto Climate. It basically tells you if statistically it's time to be a buyer or time to be a seller. By using the coupon code CLAIM8 that you can see on the screen, you get your Auto Climate for free for life. Okay, this runs on TradingView, and as you probably know, Tiger Brokers connects with TradingView, so you can get your market data and execution through Tiger Brokers from TradingView with the use of Auto Climate. So everything makes sense. So I'll give you just a moment for you to take a screenshot and scan the QR code or make a note of the URL. I'll take a sip and we continue. And again, I would like to request, if so far all is good, if all is good, even though it's not like you have too much to say, if all is good, I would still appreciate if you could type on the chat box, all good, right? So that way I get a little bit of feedback from you guys and I know that all is going well. Okay, so thank you for that. I just had a little bit of coffee using my Darth Vader mug. And ready now to move into real-time charts. And the first chart I would like to analyze here for you guys is a stock that I'm sure you're all familiar with, which is NVIDIA. Okay, NVIDIA. What a market movement in no time since October last year, going from $110 per share to $280, $270 per share right now. Amazing performance for that company, okay? But anyway, so let's understand a bit better why is it that the performance of the stock has been so powerful, so you understand the rationale of the trade that I am about to plan. So if we look at DT trend, so we are looking at NVIDIA showing blue color. That means we are in an uptrending market for that stock. But really what I care the most about, to be honest, is not the trend on the stock, which it's indeed important. But what I care about the most, it's what is the trend for the group or the sector or both. So for the group, which is semiconductors, we can also see how it's blue. But you can see that it's blue for less long than what it was blue for NVIDIA. And that means that NVIDIA is a leading stock in that industry. It's stronger than the average, and it started moving higher very strongly before the whole group and industry went. So if now the whole industry is turning to the upside and the whole industry is going to support movements to the upside, so then NVIDIA, it's potentially likely going to be a powerful asset on the way up. If I also turn on Auto Climate, which is, by the way, the tool I mentioned before, even though this is not TradingView, okay, guys? I am not looking at TradingView here. What I'm looking at here is our platform top. So I'll go to the upper left side, Tradictive Options Planner. So the acronym is top. Okay, so this is not a broker platform. This is an analytics platform. It's a platform that is very advanced and very specialized in options trading. That's why it's called options, right? TOP, the O is for options. And these platforms allows me to do the market analysis, and then I turn around and I place the orders using Tiger Brokers. Okay, so this is the type of analysis I'm doing for you today. Thank you so much for those messages, guys. Herman, very appreciated, my friend. And what we have here with NVIDIA is, we can see a climate here, and here's what's important to also understand when we look at the climate. We have some statistical data here which is relevant, which is when the climate becomes blue, it tends to move up in waves of 8 candles at a time, which in a daily time frame, that is 8 days. So again, taking auto climate to the next level, we have here some indications, like those indications here, this indication here, this indication here, which you can see there are different colors, that one here and that one here. So what are those? Where those are Elliott wave turning points. So if I was to go back in time, for example, to the prior dot, I was to come back in time here. So here that day, there was an Elliott wave turning point that would suggest that this was a correction into a bigger move, and now a wave to the upside was going to take place with this purple box being the target. And if we look at what happened next, so we went to the purple box and then actually continue even past forward. It was a very powerful wave, but again, based on Elliott wave calculations. So that would have been the target. So if we look at today's situation, right? If we look at today's situation, this is real time now. So today's situation is giving us an Elliott wave turning point in a stock that belongs to a strong industry. But not only we are given that turning point, that Elliott wave potential turning point, actually we are also given a green UFO. This is our patented technology. I mentioned trade with UFOs earlier, isn't it? So this is our patented technology. You can see here our patent number and all of that stuff. Okay. And what this is doing is looking for buy on fillers in the market. So what's happening here is that we are identifying very extreme intense buying at this price level, coinciding with an Elliott wave turning point, which means that the nature of the market from a wave point of view would be to now move higher. But on top of that, you have the evidence that there is buying happening, which would increase the probability of sustaining the move to the upside, where this upper box happens to be our final target. Now, having said that, I would say that it's going to be difficult to reach to this target in this case, because just like what we have a green UFO here, which is buy orders, we have a red UFO there, which is sell orders. And those sell orders starts at 283.49, which is right here, which is before we get to the box. So what I want to do is I want to put a trade together where I am expecting NVIDIA to go up, but when it gets there, I want to take profits and run. And in order to get there, NVIDIA may need to fluctuate and go down before it goes up. This may happen. As long as we don't reach this dotted line, I'm fine. If we reach this dotted line, it means that my wave failed, which is something that could happen at times, even though less often than not. Right? For example, here, so we had a wave. I'm not sure if that one, we reached the target. So the target was here, right? And then did we reach the target? Yes, we reached the target, actually. I thought this one had failed because later, oh, look at that. This one was a good example. So this one was a wave where we were expecting to reach that target. Okay, but notice that we went below this green UFO, right? And in the end, it turned and the wave took place, but it just had to go lower down. So is this a problem? Well, yes and no. Why? Well, it's obviously a problem when the stock doesn't go your way, but it's not really a problem because we're going to do option spreads that have limited risk by default. So if that stock goes against you, that's not a good news, but the most you can lose is limited anyway. So you will stay on the trade until you either reach expiration date and then your loss is yours, or then it came back all the way to your target and then you will take your profits where the red UFO is at 283.49. That's the plan. Okay, so this is from a timing point of view. This is my plan. My entry is now when the market opens. My target is going to be 283.49. And if it goes against me, I know the most I will lose is limited to what you're about to see in just a moment. So I'm going to plan my options trade. I'm using top, which is the options planner. The quality is low. To be honest, I wouldn't know why. I wouldn't know why the quality is low. The streaming and the internet speed looks good on my end. Maybe you need to exit the app and come back in, or maybe you have just a little bit of a slowdown on the internet connection for a moment. Just be patient. Maybe it will come back. All looks good on my end. Okay. QJW as well as poster. You cannot understand anything. Okay. Let me be visual. Okay. So you will understand that. No worries, my friend. No worries. Just bear with me. Just bear with me. Obviously, trading is a complex subject, and when we do options, it's a bit more complex. So if you are new to options trading, I could understand that you need a bit more support. So no worries. Let me explain the plan first, and then I will re-summarize it, and I'm pretty positive you will be able to follow. Thanks for the feedback, because it helps me to understand if I need to go faster or slower. Okay, so I appreciate that. So what am I doing is, again, from a timing point of view, we have an Elliott wave turning point on a strong stock that belongs to a strong group. This is NVIDIA that belongs to semiconductors. We got an Elliott wave turning point paired with buy on-field orders. All of this increases the probability for that stock to move higher in price. But the moment that stock moves higher in price, the moment it gets to 283.49, which is where the arrow is, then the expectation would be that sell-on field orders will kick in and the stock may retrace. So I want to set my entry as now, and I want to set my exit as 283.49. So I am setting myself for a multi-day trade, maybe 3 days, maybe 5 days, maybe 2 weeks, but I don't think it's going to take much longer than that, okay? Because it's a relatively short target. So how do I take advantage of this potential move? And what am I going to do if I'm wrong? Okay, so first, how do I take advantage of this move? I'm going to place my mouse on the screen where my target is, right-click, and select Send to the Strategy Builder. Got you, Polster. Because you said you don't understand anything, I thought you were new to options. All good, no problem. Just bear with me. And of course, if there is an internet slowdown on your end or my end or whatever end, unfortunately, I cannot help with the screen quality. You may want to switch to the YouTube channel. Maybe you can see us better there, or if instead of the mobile app, maybe that's an alternative that can help you. Okay, but bear with me. It'll be worth it, my friend. No worries. So I got here multiple options trades automatically planned for me for NVIDIA. And what I'm going to do, because remember, when planning a trade, you always need to plan for what to do if you're right or what to do if you're wrong. You always need to prepare for both cases, because not every trade will profit, even though with options you may even have an extra edge. Still, it's no way you will always be profitable. And if you were to be too relaxed about risk management, you may have certain trades that hurt your portfolio so much that even though you may be profitable many times, you don't make money because some trades are really killing you, right? So you never want to do that. And therefore, the first step here in my planning will be to define what do I want the max risk to be, right? And in this case, of course, we're all different here. Some of you have very large accounts. Some of you have smaller accounts. Everybody's different. Some of you are in between. So I'm just going to go for $200 because I need to pick a number. And I'm going to say, okay, so let's make it 300 because NVIDIA is definitely not a cheap stock. So I guess 300 would be better. So let's say I want to risk maximum $300. And when I update, out of all these trades that I could take, now the system is narrowing it down to 5 possibilities, which I'm going to now sort based on the return on investment. And here it says that the best trade to take that would provide, if right, 18.8% return on investment is a bull put spread, where we expect to reach the target on April 20. So we are talking about a 10-day trade. And for us to do that, we're going to use the May expiration, and we're going to be selling the 270 put and buying the 265 put. So let me go ahead and document this on the screen better. Okay. Yes, Herman, I see your question there. We're going to use May 19. Let me document this on the screen. I'm going to write it down so you guys can take a screenshot. And then when the market opens, you can go ahead and, oh, sorry about that. I just opened all the sticky notes. I only wanted to open one sticky note. Sorry for that. Here we go. So I'm just going to open the credit spread sticky note. Here we go. And so we're going to do a credit spread. Credit spread can be bullish or bearish. If it's bullish, it's called a bull put spread, which is the one we have on the top. We are doing this one on a stock called NVIDIA. We are going to use May 19, 2023 expiration. You were asking about exactly how many days. So May 19 has exactly 39 days to expiration. Okay, that's May 19. Okay, so coming back to the sticky note. So we are using May 19 expiration. Something always good to know, to not to be slapped on the face, is to know what is the earnings date for your stock. With NVIDIA, if I'm not mistaken, is happening much later. But specifically, the earnings date is, as you can see here, on May 24. So let me document that. So we are talking about May 24 is the earnings date. May 19 is the expiration, which means that worst case, if we wait all the way to the end, the options will expire prior to earnings. Oh, sorry, guys, I just did this backwards. This is funny and not funny at the same time. Sorry about that. So earnings is May 24, and the expiration date is May 19. Sorry about that, guys. And this is a good thing. This is a good setup because it's always adding risk when you hold a position through earning. In this case, we will not hold the position through earnings because the expiration date is happening before the earnings date. Therefore, no matter what, right or wrong, we're going to be out of this trade before the earnings date. Okay. Now, how are we going to do this trade? Well, this trade is going to be done by selling the 270 put. Okay. So I'm using mathematical signs. In this case, the minus sign is for sell, and the plus sign is for buy. So we buy the 265 and we sell the 270. Okay, and the entry, to be honest, is whenever the market opens, you can reassess the trade, and if you like it, you just take it. And the target is whenever NVIDIA gets to 283.49, which is where the red UFO is on my screen, right there. And the bottom part, it's 283.49. So whenever we get there, it's time to get out, okay? Because this is when that stock now, after coming up there, sell-on filters will kick in, and then there is potential for the stock to fall, and then you start losing the money you were making, right? So then that would be the trade setup, okay? And again, the risk of this trade, the maximum risk of this trade, is going to be 300. That's the maximum risk. And the credit collected for this trade, we can see it here. Okay, the credit collected for this trade. Let me simulate the trade on a risk graph. Did I click on? Okay, now yes. So here's the credit that will be collected. Okay, $224 is the credit collected. So we have a maximum risk of 276, which a maximum profit of 224. Again, we are not going to be holding this trade until expiration. The moment we get to the target, we're going to be out. So you will likely make a little bit less than that because you will exit a little sooner. But still, again, if right on the trade, as calculated on the screen, you would gain a return on investment of 18.8%. Okay, so the credit collected would be 224, and the maximum risk is 300, right? So this is the trade that we want to execute based on the trade setup that I have explained. Strong stock, that belongs to a strong industry, a strong group, giving us an early wave turning point with the confirmation of the buy on field orders, with a target which is somehow far enough for this trade to take 10 days of time. The reason why I know it's going to be 10 days is because I am using the strategy builder that is building my option spreads for me automatically. So the strategy builder is optimizing the duration, optimizing the expiration date. It's also optimizing which strikes to use, where the liquidity is to avoid slippage. So the whole process of planning your options trade is done by TOP, which is the predictive options planner. So again, one more time here, you can see the target date being 4/20. Okay, that's how I know it's gonna take 10 days, because today is April 10 to April 20. It's 10 days. Of course, there's a weekend in between, so really it's less trading days. Anyway, so hopefully now that I went through the whole process again, and that I documented the trade using those sticky notes, so hopefully this is now making more sense. If you have any question, this is the time to type. If you have no questions, but all is understood, so please go ahead and type a quick all okay, all good. That would be super appreciated. And if you have comments, by the way, guys, go ahead and phrase it, because I'm just a trader, guys. While I do this for many years and I know my stuff, I cannot predict the future either. And maybe you are looking at the markets from a different manner, and maybe you have certain comments, maybe you identify certain risks that I have not identified. And if you want to make any comment about that, for sure, we can make this conversation richer by adding your knowledge and expertise as well, if you feel like sharing. Okay, that certainly feel free to do that. I know my stuff, as I said, so I'm confident but of my abilities, but at the same time, being a trader, the market makes you humble, in the sense that doesn't matter how intelligent we are, how amazing our computers may be, the market is going to do whatever it wants, right? So if anyone identifies this opportunity as valid and you like it, please say it on the chat box. If anyone looks at the opportunity like, I don't like it because reason ABC, it'd be great for you to share that, so we all know your point of view as well. That would be a richer conversation. Thank you for that, guys. Anyway, so with that said, we are gonna go, I'm just gonna go back to the slides just 1 second, just to, in case you arrived late to the session, just to give everyone the opportunity to take a screenshot of the QR code so you can get auto climate. And what I'm gonna do right after is I'm gonna do our SMARTT market analysis, where I will be looking at the market and the market condition overall, looking at the S&P 500 index, and that way that hopefully helps you to set yourself in the right path for good trading this week. And for sure, as you can see, I welcome questions and comments, so feel free to do that as I go over. I'm going to take another sip, and we go. Very good. So let's go there. Yes, Herman, I hear your question. I hear your comment there. So the exit rule is exit when the stock reaches 283.49. Whenever that happens, if NVIDIA rallies so fast that you get to 283.49 in 1 day, then you exit in 1 day. If it took 1 week, then you exit in 1 week. If it takes all the way to May 19, then you wait all the way to May 19. And if it went against you, the great peace of mind is that, even if the stock goes bankrupt, which will be rare, but even if that's the case, the most you can lose is up to 300 in this trade, given the planning that we have done. Okay, so exit rule is based on the price of the stock itself. Even though we are trading options, the exit for this options play is the price of the stock reaching 283.49. My pleasure, and thank you for that, Mojo Stellar, for appreciating the little gift there. I've been trading for a long time and talking to traders for a long time, and one thing I find is that if I was to point at the biggest mistakes traders make, including me when I started, okay, I'm not blaming anyone, please do not get me wrong. Sometimes I speak a little direct with direct words, maybe because I'm Spanish. joking, but now getting serious, the biggest mistake, if you wish, I've seen made, it's to go long when it's time to go short, or go short when it's time to go long. In other words, not assessing the market condition right, and get excited to go long when it's time to go, when it's time to short, and getting excited to go short when it's time to be a buyer. And the beauty of AutoClimate is that from a statistical point of view, which is a fantastic reference, not a guarantee, not a crystal ball, but a fantastic reference. So AutoClimate is going to tell you, statistically speaking, what is more likely going to happen, and therefore you know how to position yourself when it's time to go long or when it's time to go short, meaning that you will tend to minimize the amount of times where you were on the wrong side of the market, which is the classical mistake that I see being made by traders, in all disciplines. So hopefully that helps, and I appreciate very much your words. And thank you so much for the participation, guys. That really makes a big difference for me. Anyway, so our market analysis, okay? So what are we gonna do? Well, first, I'm gonna start from left to right. And the first thing that I want us to look at is, on the very left, I got a chart of the S&P 500 index. This is a daily time frame of the S&P. Okay, daily time frame of the S&P, SPY ETF, right? It tracks the S&P. On the right, let me close the sticky note. We don't need it anymore. On the right, I got the S&P futures, ES, on a 34-minute time frame, which is intraday trading. Okay, so I'll talk about this in a moment. But let's begin first with the chart on the left, which is the daily time frame of the S&P. So what do we have? Okay, I'm talking about AutoClimate. So what is the climate in the case of the S&P? Well, we look at the last dot because we trade in the present. And the last one says we are in a confirmed climate to the upside. Upside is because it's blue color. As you can see, it could also be red, but today is blue. So we are in an up climate. And confirm is because the dot is thick. There are times where you can see the dot is thin instead of thick. That would be unconfirmed climate. Unconfirmed climate equals no idea if it's time to be a buyer or time to be a seller. I don't have any probabilities on my side. I better wait for the market to define itself. And the moment it gets confirmed, now it's time to act. Is that making sense? In this case today, we have a market which is confirmed, and is confirmed, suggesting to be a buyer. So this is the first part of the conversation. Now, having said that, nothing lasts forever. The statistical duration, the count, the statistical duration of up climates on a daily time frame for the S&P is 5. So a normal thing to happen, that's a 1 standard deviation. That's why I said a normal thing to happen, 68.4% of the times, is for this climate to last 5 candles on the way up. So when the market becomes blue, you should expect 5 candles on the way up. It's easily achievable. It's a normal thing to happen based on statistics. We've been in this climate for 9 candles instead of 5, meaning that we went past what's normal. Well, if we went past what's normal, actually, it's kind of like double, right? When the market opens today, it's going to be number 10. 10 is double than 5. So this is kind of like a 2 standard deviation of what's normal, meaning that this is not normal anymore. And while we are in a market, I have a degree of concern for this market to turn down. It may not go up immediately. It may need to retrace a little bit, change climate to red, where if it does change to red, a normal thing to happen is to move to the downside by 3 candles at a time. So we may have 3-4 days on the way down to then go back to blue and then give us another 5 days on the way up. So in other words, the market is healthy, but we are a little bit late to the party to be buyers. Okay, in the case of NVIDIA, again, I will be cautious with this trade if you go with a large position size, because you may need to see the S&P retrace before the S&P goes back up, and only then probably that's when you would see NVIDIA really pushing higher. So keep that in mind, and this may be something for you to know to quantify your position size. Maybe, when the climate is, in an initial stage, like here, you go full size. When the climate is in a later stage, like today, you go half of the position size. So you buy half of the contracts that you would normally trade. That kind of an approach, okay? So a little bit of caution here, because we are indeed in an up climate, but statistically speaking, this climate, it's not so healthy any longer. Now, what else? I'm not concerned. Okay, I'm not concerned about, I mean, everybody, I may be wrong, but everybody's talking about, financial crisis with the banks, where so far I have no concern. We had reasons for concern when that happened at that time. But at this time, notice how the blue line is above the gray. So what are those two lines representing? Where the blue line represents the implied implied volatility, I'll type it as IV, of calls, where the gray line represents the implied volatility of puts. And I'm not sure why I didn't hit the right key. And so what does that mean, that the blue line is above the gray? Well, it means that the implied volatility of the calls is greater than the puts. And there are only two ways to achieve that, which is, number one, more calls are bought than puts. Okay. Or more puts are sold than calls. Now, in both cases, it's bullish. If you are buying more calls than puts, that's bullish. If you are selling more puts than calls, that's bullish. Selling puts is bullish. Buying calls is bullish. Selling puts would bring the put, which is the gray line, down. Buying calls would bring the blue line, which is the calls, up. So when you see the blue line above the gray, it means that either because more people are buying calls than puts, or either because more puts are being sold than calls, or both is happening at the same time, whatever it is, that's the only way how you get the blue line above the gray. So notice when the concerns about the financial industry was out there and the market was crashing quite hard, we got the gray line above the blue, meaning that there was a bearish sentiment in the options markets. There were sellers on board. By looking at the prices of calls and puts, we could conclude there is a lot of a bearish sentiment. There are many, many sellers in the market, and you can see what happened. A very powerful red climate was formed. Okay, just like here, there was a lot of indecision, blue, red, blue, red, blue, red. Next thing you know, the blue line went above the gray, and the moment that happened, here we go. We develop a new blue climate. So where are we at now? Well, we are now in a place where the blue line is above the gray. So in other words, there are buyers in the market. This climate that extended too much may need to take a statistical break, and we may see the market stop or correct for 2 or 3 days or 4. But from there, unless this changes, we have buyers in the market, and I would expect another powerful wave to the upside to be followed after some sort of a correction in the following days. This is what we can see. Now, from a statistical point of view. Now, from a technical point of view, take a look at the S&P future, where we got sell-on field orders added like 1 hour ago. So this is a 34-minute time frame. So 3 candles ago, an hour and a half ago, we got sell-on field orders added to the market. And the buy orders are not found until we get to 40.60. So 40.60 it's significantly lower. I mean, it's not like it's crazy lower, but it's a bunch of points lower. You need to see a powerful move to the downside on the S&P to reach where the buy orders are. So we may have a down day today intraday. Now, when looking at the S&P, there are multiple stacks of those on-field orders. But again, notice how those numbers, 407 to 405, guess what? In the middle, you got 406, which is what we saw on the futures as well. Okay, on the futures, it was 4,060 because futures trade in multiples of 1,000. Okay, so 4,060, where the SPY ETFs is 100. So 4,060 would be 406, which is right here in the middle of this UFO. So no matter if you're looking at futures or the S&P, it looks like we are likely going to have a down day today, and these may change the climate to red, which is going to last for then, statistically speaking, 3 days until it turns and goes back higher. So I would say no concern, but definitely take it easy when it comes to entering long trades based on this analysis, which is based on statistics, which is just a reference. Of course, we cannot predict the future, but we certainly need to use references which are not biased in any form. And to me, the way I think about it, and you may agree or disagree, but the way I think about it is that to me, it's statistics are a better reference than a human bias. Anyway, so with all of this said, we just hit the ending time for the session. Hopefully this was eye-opening, this was useful to you. I will go to the last slide so you can get access to the link, the QR code, the coupon code claim8 to get your AutoClimate for free, so you can do this type of analysis on your own. And also remind you of our book, as well as our social media handles, Trade with UFO on Instagram, YouTube, Facebook, Twitter. For sure, go there, like us, follow us, and all of those things, because we post stuff from time to time, which is hopefully useful to you guys. And you can also see my email address on the screen. So if you have any specific question as you're watching this, either live with us today or recorded, and you have any questions, you would like a copy of the slides, I don't know, you name it, we are here to help. We're super passionate about trading and people that take trading seriously. So if you are one of those guys, count on me, count on my team, and happy to help everybody. In the meantime, I will say bye to everybody. Super special thank you to Tiger Brokers for organizing these Tiger Live sessions and for supporting the whole thing with their mobile app, their streaming service, everything else apart from being a fantastic broker. Thank you so much. See you all. Take care. Have a good trading week, everybody. Bye-bye.